All right. Well, first of all, welcome everyone. Thanks for joining us. The first spaces that we've done for a little while. So it's, I guess, great to dust the mic off a little bit and get our voices back out here so we can connect not just with our community, but be able to connect with the guys from Fyde and, I guess really just let you guys know about everything that's going on in our world and try to get ourselves back into being a little bit more front and center vocally for you guys. So again, thanks everyone for joining and those who are listening back to the recording. Thank you, Carlos from Fyde, for joining us as well. We're, really excited to be able to join with you guys. We've obviously been chatting for a little while and got a few different pieces where we're working together with you guys. And I think on the surface, it looks like we're doing something similar, but we're actually hitting two different niches and two different angles of the same idea quite well. So I guess maybe what might be best right now is if you wanted to give a little bit of an introduction to yourself, your team, and what it is exactly that Fyde are building, just to get our listeners a little bit up to speed on what you're doing. And then we can sort of go from there.
Yeah, for sure. Would love to do that and appreciate you guys hosting and super excited to be working together with you guys. Just as like a brief intro on Fyde, we are a treasury management protocol. We built out what you can think about in DeFi terms as like a multi-sided liquidity vault that acts as like an on-chain ETF. Which is, if you're more of a TradFi, that's kind of how I would think about it. And we initially built the idea so that we can help DAOs and protocols diversify their native treasury holdings without crashing the price of their tokens while doing so. So this is something that we worked on and we launched earlier in the year. We've gotten good traction with a few different clients now that we've onboarded. A lot of really OG builders in the space, which we're quite excited to work alongside with, just people that are building projects for the long term and really seeing different use cases for crypto and what it could become in the future. As far as me personally, I come from a traditional finance background. Originally from California, started my career in investment banking, then was a portfolio manager doing alternative investments at a bulge bracket bank. Working on a lot of kind of CMBS deals and kind of commercial real estate deals as well. Then after a while, thought that was just kind of too slow and boring, and spent a little bit of time in asset management before moving to London and attending business school, where I met some of my other co-founders, Bo and Barry, and our CTO as well through Bo. There we really got involved with the Blockchain Society at London Business School in particular, and it was one of the kind of the key reasons why we decided to start Fyde and work on kind of DAO treasury management. So yeah, that's kind of a bit of the background, high level in Fyde.
Yeah, great. So I guess one thing that, you mentioned in there, which I spoke at the very start about the fact that we do have some similar things that we're doing, but taking them from a different angle. So one of those things that you brought up is the on-chain ETF, allowing people to diversify their native treasury holdings. So I guess for everybody on both sides that's listening here, one of the key differences between how pods work and how Fyde's treasury token works is that we enable people to create their own ETFs, but when they do that, they choose the specific assets which go into it, and they do deposit each of those assets equally, whether it's directly choosing them or doing it via a Zap function to get there. With Fyde, it's a little bit different. So with Fyde, you can actually deposit any of the assets that are included within the treasury, and it can go in there, and it's a bit more of a weighted model, where ours is unweighted. And you can then also choose to withdraw just one of those assets as well. So what that means is that the index will sometimes have overpriced and underpriced assets within the vault itself. So if you have an asset that's overperforming against the index, that asset might be unwrapped and then sold off. then the way that we approach with our product is effectively it doesn't change the weighting of the token. So if one token underperforms, it doesn't bring down the price points of the other tokens. It's not to say either is better or worse. They're both two different approaches. And in fact, the model that you guys had was one that we included within our first iteration, but moved away just to stick with our particular focus. You sound like you got something you want to chime in there.
No,
Carlos.
I was just gonna say that it was just when we first came across you guys, we were like, it's just so funny how, two separate teams building very similar ideas, and even as we kind of gotten to know each other a bit, I think the way we think about our protocols and I kind of did diligence on being thoughtful about creating something that's trying to be novel, and I think in a lot of ways is novel in DeFi. And we kind of, never met, but kind of came to a very similar conclusion and thought. It's just so funny how kind of the space works in that way. But yeah, I would definitely just love to hear a bit of background on how you guys came up with the idea, the process of working with it, just because it's just so interesting how, it's very, very similar projects, but in a slightly different flavor, which very complementary, frankly.
Yeah, exactly. And it's one of those things, it was kind of cool when we finally got to speak. We really just both seemed to click with each other's ideas. It made perfect sense. And you're right. We both sort of came to something really similar, yet different perspectives. So I think it's really cool. A little bit about how we came up with what we came up with. That's a really good question. So I will say right now, effectively, our contract dev and intern themselves engineered probably almost every element of the protocol from the ground up, starting from an idea of how we might be able to start earning yield on indexes, and really just evolved over time that conversation. I'd kind of like to let Intern take a little bit of the lead on some of the things that were really key drivers for things that you wanted to bring into a new protocol that you were launching, to make sure that it was something different and utility in a space where during that time there was no utility going on.
Hey man, I'm just the intern, but it's a good point. It was just an interesting concept to come up with the idea of. Initially, we called it this infinite money glitch. We've since revised it to, I guess that's basically the concept of this volatility farming, which is just perpetual and ongoing because there's always volatility in crypto. But just the ability to sort of capitalize on this arbitrage process and try and monopolize that process and bring that value back to the people that are participating in providing that liquidity. So effectively back to the market makers. And initially we were actually going to launch without a token design, but then move towards, well, how do we capture this volatility and tokenize it into a single currency across all these different pods and really create that utility there, and socialize the benefit across, to different pods. So, I guess one of the key concepts of how our system works versus just standard, adding liquidity and earning yield from it is that socialized benefit, in the fact that every time that yield is generated, it's converted to this one token currency. So it doesn't matter which pod it is, it all sort of that volatility is converted to that single currency. Then a portion of that currency is burned. So it makes it deflationary, which means that every time there's volatility, there's this net buy pressure because the token is first bought and then a portion burned. So a net buy pressure always. And then that socialized benefit where basically, that I guess from the last cycle, the WAGMI sort of thing, we're all going to make it, system where everyone's stronger together, or that 3-3 sort of, pioneering from the OMIs, where when you work together, it's actually a net benefit to everyone. Whereas, if I add liquidity to my pod, even if it's not generating volatility in this instance, someone else generating volatility is basically buying and burning peas, which is benefiting the yield that I've already earned in my pod. And then later, maybe they're not generating yield and I can start generating. And so basically everyone on the platform is basically adding to this socialized benefit of the volatility is always out there in the market, and we're basically bringing it all in within the Peapods protocol and tokenizing that volatility into that common token. So I guess that's why it's a different, like a new model compared to something like just, everyone's on Uniswap doing their own LP and they're all sort of distinct. It's very much bringing it, to that socialized benefit. I think I went a bit off on a tangent there, but I guess that was the main sort of idea behind the protocol. How
that was good. There was one thing that I think is worth bringing up, and that's, you're right, we didn't necessarily want to go with the token straight away, but once we decided to, we said the one thing that was non-negotiable, and you touched on it loosely, and that was the fact that it needed to be sustainable. So that was why we launched fully diluted. There was every single token in circulation at the time of launch. And I think that's really important to bring up because we are starting to see and have seen over the time other forks or copycats of what we're doing come out. And almost all of them, aside the ones that have just been direct forks and hope to catch on, have started doing raises. And in doing so, they are taking away from the sustainability side because they've got new emissions coming in the way of token unlocks, which completely kills the sustainability concept of buying back and burning the token. Because effectively all you're doing is using the protocol to fund exit liquidity for your seed participants. So it's really important to be aware that the thing that sets us apart is sustainability. For all these other projects, effectively what they're becoming, especially those that set aside tokens within their token splits purely for incentivizing pod performance. If they haven't been derived from the market, then it's effectively just a liquidity mining campaign. So the sustainability side is one thing that was really, really important to us when we kicked this project off.
Yeah, one thing I'm already getting a sense is the key objectives of both of our companies. I think we have a lot of the same missions and kind of driving items. Like for us, sustainability as well was something we spent a lot of time on, thinking about how we can make tokenomics and a protocol that will be here for the long term and really stable in a way that benefits all the users. Like the community effect as well is something that we directly integrated into our liquid vaults. It's a reason why we decided to start off with kind of one vault where everyone can pool their liquidity and kind of together work to, deepen that liquidity and optimize it as much as possible. And volatility as well is something that's been central to what we've been working on. And I think this is where maybe we're a little bit different, where we really sought to reduce volatility and really impermanent loss as much as possible to make it something where especially because our thesis was helping crypto companies and their treasuries and their communities. How do we make volatility be, a little bit more streamlined so we're not seeing these, up 90%, down 90% price swings, which a lot of times, it whips off people in and out of the market, right? So if they have leverage or if they're really looking to liquidate their tokens for, for whatever, right, to pay rent. We wanted to make something that, was more of a bedrock for the community people can rely upon. So it's just fascinating hearing all these parallels of our teams and how we kind of came across our ideas.
Yeah, I couldn't agree more. And I think it's one thing I love about the space is that you can find different solutions to the same idea and different ways of thinking about for instance, how you tackle leverage, how you tackle people wanting to liquidate positions, those sorts of things. And they can both be equally as powerful, yet being completely different approaches. There's obviously, you guys have got your Fyde token coming up as well. Did you want to touch a little bit on the plans for that token that you've got releasing?
Yeah, for sure. It's something we're quite excited about, and I'm frankly been really waiting for us to launch it. The 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 Fyde kind of ecosystem was always a two token model, and I truly believe launching the Fyde token will kind of complete this initial protocol and take us to more of a sustainable and growth oriented trajectory. The idea was always to have the Fyde token represent really something close to ownership of the entire protocol itself, where right now we have the treasury token pTRSY, and you can think of that as like having a share in this particular strategy. And over time, we most likely have different vaults with different strategies where different tokens give you exposures to these different kind of risk return objectives. And the idea is to have all the rewards and essentially all the economic benefit accrue to the Fyde token. And it's something we've been ready to launch now for a couple months, with, all the key players kind of lined up, exchanges, market makers. It's only been about the timing of the market. That's really, people go away for summer, and obviously volatility for altcoins in particular hasn't been the best in this current past couple months. So we've been kind of waiting on it, and in the meantime, just building out different products and trying to think about and push the boundaries of what tokenomics can really mean, and how to build utility for these different tokens and communities. So there's quite a few different things that we'll be rolling out. Actually, it'll be a kind of a VE tokenomics model. And the idea will be that we really want to reward users with emissions for giving us good information and for really helping grow the protocol itself, either by contributing the assets that will end up outperforming and providing the most economic benefit to the protocol, or by we also have a couple different takes around governance, which is a key component that's always been built in deeply into the project as well. We're really trying to align incentives and not create this economic system where people buy up the token but really extract value. It's one of the key things we were really looking to avoid, that we saw was really broken in the DAO space in particular. So that's really close to getting ready to launch. Outside of what happened this past weekend, it seemed like the market was coming back, and I think volatility in the crypto space is something good for token launches in general. So, quite excited to do that. We will have an airdrop for our users that were early and are still contributing, and we'll have multiple seasons for that as well. And I think season 1 will look very different to season 2. So we're quite excited just to experiment with different incentives and help really start increasing liquidity for treasury token and for the pool itself as well.
Yeah, cool. I mean, that's really exciting. The fact you've got that token coming out, you've got a lot of things lined up to make sure that you can really kick off with a bang, which I think is awesome. The other thing that I think is really cool is you obviously mentioned there's an airdrop. And this is something that we worked with together as well to discuss how we can, I suppose, work together collaboratively and bring our communities together and help our community members contribute towards your treasury token or your vault as a whole, and how you could help to repay our community members who do that as well. So there is a really good opportunity that we do have where users can wrap their naked peas into the treasury token by depositing it at the Fyde DApp, and they can then take that treasury token, put it into the pTRSY pod, and those tokens will be earning yield in the same way that every other pod token does. But they'll also be eligible for the airdrop for Fyde token. You might have more information about the seasons that was going to be eligible for, and anything that we might need to know about that.
Yeah, that'll be really going into season 2. So the rewards for Fyde to the P holders will be a lot more direct. And, it's just definitely, just as I think the more I look into Fyde, new keys and kind of unfamiliar with what you guys have built, it seems like there's definitely opportunities to even expand the incentive avenues for different users between ourselves. Right? There's even different tokens that we've listed that have pods available as well. So it could almost be a use case where Ps obviously could be eligible to be wrapped and then have the treasury token be put into a pod as a way to kind of earn double rewards, but then also maybe other tokens as well. Especially, 'cause I think we're going to be, we've been looking to potentially allocating some of the tokens in our vault back into Peapods so that we can share in some of the yield that you guys are creating on your vault, so we can kind of help each other grow TVL and create this very sustainable growth loop amongst each other, which I think is something that's quite exciting and we've been kind of actively looking into at the moment. But yeah, I think that it should be an awesome use case. And I think especially once the Fyde token is live, you guys are really kind of the first case study of can we direct emissions to a protocol outside of our own kind of closed growth loop, to really kind of help TVL and increase liquidity and just increase different use cases across the space for the benefit of our community members.
Yeah, that'd be really cool to be able to bring some of your assets back into pod tokens and be able to accept the podded versions of assets that we have within ours as well. I think that would be really cool. The other thing that you spoke about earlier, and in the interest of keeping on topic with some of the other stuff we have, I kind of glossed over it. But yeah, it's been a hell of a volatile week in crypto. Like I don't really distinctly remember the last time I saw a minus 25% day on Ethereum. I think I do actually, and I'm fairly certain I got liquidated for about half my portfolio. But regardless, it's been extraordinarily volatile, and I know how we performed within that because I could see the bot in our Telegram telling us just how many new wrapped P tokens were in there because the ARB was going absolutely insane, particularly on the L2s. We had gas float, which got in the way of a little bit of the mainnet stuff, but we definitely saw a large amount of arbitrage occurring with the steep, not just volatility, but also the volume that's gone on for the last few days. And I think it's been a really good way for us to prove that our protocol keeps working. I'd be really interested to hear some feedback on how you guys have done, knowing that you've got such a heavy weighting of altcoins within the treasury vault. I'd be curious to hear how you guys have performed up against, I guess, Ethereum over the last week or so.
Yeah, definitely. Yeah, on your guys' front, just first, like I was definitely very confident that you guys would thrive in this environment. But just in terms of us, yeah, the whole thesis and the use case of this initial strategy was just to track broad market returns, which in this situation we define as Ethereum, right? Can we give these different users in the space Ethereum-like returns, maybe with more stable kind of return streams? So we generally have performed in line with Ethereum, and that's been the case over the last couple of months, where sometimes we'll underperform a bit, sometimes we'll outperform, especially when the market rallies. We tend to outperform Ethereum quite a bit. And yeah, over the last 7 days, we've been underperforming Ethereum a little bit, but given the amount of alt tokens that we've had, I think that's I'm pleasantly surprised that that's been still, within the range. It's only been within 1 percentage point or two, a little bit less than 2%, like 1.5. So for a lot of the clients that we work with, that is actually a really good use case because their own governance token oftentimes is down quite a bit. Sorry about that. Yeah, their governance tokens have definitely outperformed. So for them and their community users, it's been a really good trade for them to come into treasury token, and we've been getting feedback that they kind of see it as a way to get a hedge, right? Where they maybe still want some exposure to their own governance token or the airdrop that they receive from the community because they're still bullish on the underlying use case, but it's a way for them to kind of trade in and out of that token in like kind of a different way without risking dumping of that token. So we've gotten really good feedback from the community. Obviously, over times like the weekend, people people panic and you get different messages from different clients and people, just the space sucks up liquidity just in general. And we were able to, absorb those withdrawals without a problem and kind of fund those requests, which, we're really happy about, right? So I think every time this kind of thing happens, your protocol gets battle tested, and we've always done fairly well. So we'd have broken a long time ago. But yeah, so it's been going well. I think we're generally positioned the vault to be a little bit more conservative. And I think going here over the next couple of weeks, we're gonna, kind of trim down the amount of tokens we have in the vault and just gonna increase the selectivity of it so that the quality of it can increase over time, right? We see that during times of the weekend, not every token project, performs as well, right? Some of them will rebound harder, some of them will perform better, and others maybe not as much. So I think we're continuing to be on top of that and kind of trim down and ideally over time build a really high quality blue chip basket that people want to be able to buy into.
Yeah. I mean, I'm just having a look through the dash now, and I can see like some of those highly weighted altcoins you had in the pod got hit pretty hard, and to be hit that hard, and then you guys still only be sitting 1 or 2% behind Ethereum. It's a really good way, like you said, to set up a hedge on very volatile assets. So it is a really good performance, and you know that when market turns around, it's just going to go the exact opposite way, and you guys are going to outperform Ethereum, and probably at a much higher rate as well. So
and we're quite excited here because one thing we're actively working on as well in terms of just roadmap is expanding into other ecosystems, right? Other layer 2s, even other layer 1s like Solana, Ton, and kind of Barachain possibly as well. And I think with that, we'll be able to mitigate and expand the return stream, right? Where now maybe it won't be subjected as much to Ethereum like returns, but maybe more broad market crypto diversification, right? Because we saw over the weekend that, Solana and Bitcoin performed much better than Ethereum, right? Usually those three are kind of in line with each other to some extent, but, we saw in times like this, Ethereum really, really got hammered. So for us, our goal is to expand the diversification, right? And get uncorrelated assets into the vaults. So just quite curious in you guys, because you guys are a bit ahead of us on like expanding into other chains and other layer 1 or 2s as well. Like, how did you see you guys? How was the volatility and the use case amongst the different layer 2s and kind of different pods in the ecosystem? Were they generally in line, or did you see that maybe Base is more active in Arbitrum, or how was your guys' experience across layer 2s, given that you have a direct integration in your protocol?
Yeah, so I mean, first of all, that's good to hear you guys are looking at expanding. I think that's going to be really valuable for you. Look, to be honest, I think in terms of expanding, we absolutely, without a doubt, was necessary for us, and I think it's a great thing that we are in ecosystems that are extraordinarily low gas cost environments. I still genuinely believe that Base has a big opportunity as an L2 this cycle with their focus on bringing in retail users. I think it's a really big opportunity. Likewise, Arbitrum is still the home of DeFi on L2s right now. So I think the volatility and volume is definitely not as high currently on those L2s when we compare it to mainnet, but the need for volume is also significantly lower because the gas cost to carry out ARBs is just so much lower. So we get, I guess you call them almost microtransactions, so significantly more transactions just at a lower dollar value, but it all adds up and it's all just accretive to what we already have. So I think that's a really, really good thing, and I think that's the fact that it will allow you to tap into some more blue chip assets that are more stable, I think is a really good opportunity. I think one thing that I know many people in our community would love to see you guys do, and I think could be something worth looking into, is taking a look at bringing something like our POM pod and bringing Olympus into the treasury through something like that, because that effectively works like a stable coin that is designed to outpace all other stable coins, basically. it's got range bounce volatility. So it'll give you that volatility, but it'll also give you the stability you guys are looking for. And I think being able to do that by incorporating a pod token could be really, really interesting for you guys in the future.
Yeah, totally agree. I think it's something we definitely have a call on that, just to kind of strategize around it. Like, there's quite a few different tokens that have fairly high TVL on your different pods, and it's like, yeah, how can we incentivize those communities, and we can kind of have this, extra step to the TVL growth loop between us two and those respective clients, right? Now all of a sudden we multiply the game, right? You guys have NPC token and OHM and all these other tokens. We're like, yeah, we would definitely be open to having that exposure in the vaults, right? So definitely should put our heads together on that and see, maybe we can bring those community ins and have a bigger Twitter space call next time around.
100%. And we can have some other discussions about some of those L2 recommendations offline as well, where we can just share some more of our experiences that just small things for transition,
Yeah, we're totally in line with you guys on base and Arbitrum. We may have announcements on that coming up really soon. So we're totally in the same space.
Yeah, interesting. I was just going to say on the, you guys bringing in other communities and stuff. I think Peapods is probably a really good, like looking at our pods like you're doing and finding out what communities sort of rally around pods and sort of bring TVL. We're a great sort of use case for you guys, or like a testing ground almost of what assets create that sticky TVL. Because, we didn't mention before, but yeah, the Peapod system is completely permissionless. So we're not necessarily like bringing in any of these pods. This is like purely community based. They come in, they create the pods, they create the fee structure, and then they rally around the pod and bring new users into the pod. There's a great example of, the Miggles pod on base. And sorry, I've had a mental blank of who started that pod, but they're been really good recently at like promoting that to that Miggles community and, just on Twitter in general, and it's done really well out of that. So, it's really good to see when those sort of things happen. And yeah, great for you guys to keep an eye on and see, which assets are attracting that sort of, community sort of, enthusiasm. And then also on one other point about the Arbitrum versus base, or just other layer twos in general, I have noticed over the last couple of days that base seems to have so many more transactions, like our, just arbitrage transactions happening than on Arbitrum. Sorry, arbitrage transactions happening more than Arbitrum. And I'm not sure why. I'm not sure why that is. If there's just more, maybe MEV bots, or it's not really MEV on layer 2, but just arbitrage bots. If there's more of them and they're enacting sort of at a lower threshold on base versus Arbitrum, but yeah, I'm definitely, that's something to look into. Could be also something to do with the sequences differences, or I'm not quite sure what's happening there, but yeah, I'm very bullish in general on base for the future, for like this retail adoption, and hopefully it sort of takes some of that meme volume away from Solana. And because we're on base, we can then tap into that a bit more, which again, to bring back that Miggles pod, Miggles being one of the larger memes on base, it's great to have memes on there because they just have, great volatility and volume typically.
Yeah, for sure. We're big fans of meme coins and, what they represent, right? I think they've always been a core central element to crypto in general, right? Bitcoin was really the first meme coin that really took off, end of the day. But yeah, I think very bullish on the base ecosystem, and something we're like, in terms of our list of projects, it's kind of the first on the list that we're working on that's going to be getting ready to be rolled out here imminently, frankly. But yeah, it's quite curious to hear your experience on the different arbitrage across base and Arbitrum, right? I think that'll be interesting to explore how our different products interact once we go on these different layer twos and different ecosystems. And I think the way that we'll approach it is that instead of just kind of forking our existing projects over these different layer twos, I think we'll have kind of different flavors and kind of unique use cases across the different ecosystems, so that there's a reason to be on base versus Arbitrum versus Solana, and you're not just getting a copycat of the exact same thing. especially because for our liquid vault, the current idea is to build up as much liquidity on this current implementation and really focus on, having one flagship product that can provide kind of very, very deep liquidity at, all times in the market, which will really put us in a position to succeed when, we have instances like this weekend where people are looking across the space and saying, where can I get liquidity? Because I'm scared that the market might get worse or something might happen, right? We want to be in a position we can say, yeah, we can handle it. Go ahead, right? We can mitigate any bank runs. We never have that issue at all whatsoever. Every cycle we go through, we kind of get better as we build up our asset base, and that'll be the goal going forward. But yeah, I'm definitely excited to start expanding here. Just as we've been starting the diligence process and talking to different potential clients and users across those different ecosystems, it's like very fertile ground for us. It's a good spot to be in.
I think that's a great idea to do different flavors across the different chains because, yeah, those different chains market themselves towards, different ecosystems as well. This is maybe a technical question. I don't know if the audience is that interested in it, but in terms of like what assets you can add, do they need to have an oracle? And what sort of oracles do you accept in that case?
Yeah, oftentimes we do need an oracle, and right now it's like a Chainlink oracle and a Uniswap V3 price feed. So there needs to be enough liquidity on like a Uniswap price feed in order to get that. And it's one of the reasons why we're also not going to just be porting over our existing liquid vault, because oftentimes the oracle infrastructure isn't as readily available in some of these other ecosystems, or maybe there's only a few different tokens that kind of provide that quality threshold. We're working on a few things to kind of help us expand that flexibility, but it's a bit of a trade-off because having reliable oracles also help us price the assets in our vaults, which becomes very helpful in times where market kind of breaks and people pool liquidity across different liquidity pools, right? We built our protocol to be stable and reliable, and we want people to be able to sell and come in and out of the vaults at any market condition, no matter what, 24/7, forever. And for that, we want some resemblance of price stability and be able to price the assets. So yeah, so long story short, currently we do rely on oracles. As a V2, I think we would add more to be able to add more assets.
Okay. Yeah. Thanks.
Okay. So we've spoken a little bit about you've got your token coming up, you've got chain expansions. I suppose that's pretty much your upcoming roadmap right now, or is there any other?
Oh, man, we got
goodies you guys have got up?
So many things in the pipeline, man. Like the team has just been building and like a lot of it really is like contingent. Like as soon as we launch the Fyde token, we'll be able to like start launching these products. I think we have consistent product updates we'll be able to announce after we do TGA for like a while, right? The team has been very, very capable about building and shipping fast. And right now it's, we built a Telegram app as well, which is a kind of a way for us to kind of test out the ecosystem. We're quite bullish on Telegram in general. So we built out an app, as an example to allow users to join and, click farm and be able to farm points. So that's something that if anyone here wants to farm free points, they can join our community and access this app. And we've gotten really good traction off of it. The community really loves it. I personally find it to be a really engaging use case. And so we've been working on a few different upgrades for that as well, which will be kind of an interesting flavor, a very different take from what you expect out of a DeFi protocol, frankly. I don't want to reveal too much. It's been a little bit of how can we balance, not overwhelming the community with all these different things that we have in the backlog. It'll come with due time, but yeah, we have some more stuff coming on Telegram, the cross-chain expansions as well. We have a few things around prediction markets with their governance as well, which I'm personally quite excited about that. And something that we're going to see how the community likes it, frankly. We have like maybe 4 or 5 different things in the pipeline that will roll out as a very basic V1. And if the community grabs onto it and they give us good feedback, we can expand into it and already have plans in place that, could lead those different sub-use cases to very interesting places. They could be products on itself. But yeah, I think the Fyde team has been busy. You know, we've been sitting the whole summer waiting for token launch, and in the meantime, we've been just busy grinding and building and, you know, essentially building up different ammo for us, once we launch. I frankly can't wait for token to launch because that'll really open up the floodgates for us.
Yeah, nice. That's awesome. You guys have got a huge pipeline, it sounds like.
Yeah, what about you guys? We'd love to hear about what's going on in pods as well.
I was going to say, I think it might be about time to let Intern do a little bit of an overview as top line as possible on what we've got coming with Boosted Volatility Farming, which really is a bit of a game changer for us.
Yeah, sure. It's a big update for us, and we'll be dissecting it in different stages because I feel like there is a lot more there than we have previously disclosed, a bit like yourselves over there at Fyde. Just been building and it's easy to, well, I mean, not for you guys, you're waiting for the opportune moment, but for us, a little bit of I wouldn't say scope creep, but you know, we're just continually advancing on the topic and improving it. And it's really turned into a really exciting product or suite of products that we'll be launching with this, what we're calling, are we calling it BVF already? Well,
you know, a little bit of information, people. Yes, it will be BVF.
BVF. I'll say LVF so people know what I'm talking about. But
what does that stand for? BVF?
It's going to be Boosted Volatility Farming. So it's a way that we can boost our farming through effectively a leverage structure. The reason why we're moving away from previously we'd called it LVF, Leveraged Volatility Farming, but feel like that word leverage is a bit of a dirty word and doesn't apply so much in the traditional sense to what we're building. So just to, I guess, jump into like how it operates and why that's not the case, to be scared of this term leverage in that case. Effectively what we're doing is, I'll give a little bit of a history first. So first we had just our standard model that we came out with, which was, you know, in our launch in early December, which was this ability to farm volatility. You would come in, you'd create a pod, you'd add your liquidity to the pod, and then you charge this fee to the arbitrageurs that come in and out of the pod, and generate that yield purely for the LPs. Then we added some more game theory to it with our Green Arrows update, which was, I forget now, maybe sometime around March. And what that enabled people to do is just to wrap into the pod, but not add LP, and benefit just from a portion of the fees being generated, going back into that, basically the single side wrap to what we call the P token. So you could wrap into a pod and benefit from those people that were LPing and that constant arbitrage. You would get a portion of that, but in return, you wrapping in and out was also creating fees for the LPs. So the LPs were sort of there to attract both the arbitrage, but also to attract people to wrap into the pod, because as the pod expands and contracts, they're also basically earning fees from that. So it added this extra layer of game theory where it was completely optional, but we've seen basically every pod has done this since we've enabled the option, is to give some of the yield back to single side stakers to encourage them to wrap in. And, you know, it's everything that we're doing is basically an experiment in this game theory, like this, you know, these so-called pods hadn't existed before. So really everyone's experimenting and learning on the job. Some pods, have done extremely well. Some haven't done as well. Some have ended up with far too many people being on the single side wrapping versus LPing. And some the opposite. Some haven't really been able to attract anyone to come in and do that single side wrapping. But ultimately the yield generation was still being funded by people adding LP. And to add LP, you basically need to either be bullish on both the tokens that you're adding in LP, or you have to basically convert, or you're trading your impermanent loss that you would get on that LP position in exchange for the P's yield. Now, in most cases, I'm like pretty adamant that you earn more in the P's yield than you lose in IL. And we've done lots of modeling like internal modeling to show that that's the case, like when you backdate on a lot of pods. And that's generally because, a token doesn't go just in one direction. There's a lot of intra-volatility, especially within, range-bound trading. And there's also selecting the right fees and selecting the right pairing asset. Like there's a lot that can be done. And obviously some pods, as I mentioned, have performed better than others. But in general, that hasn't been a problem. But what has been a problem is people basically, it's quite niche to find people that are going to be bullish on both those pairing assets to provide that LP. Most people, they want their token, they want to earn yield on it, and they want full exposure to that. They don't want to split their exposure and add this LP. So what this BVF is going to do, the boosted volatility farming, is remove the need to be reliant on users being bullish on both the assets. So what does that mean? It means we're basically splitting people. You have two subsets, or it's two groups of users now. People who are bullish on the P token, or just the token, whatever the token's going to be. And then people that are either bullish on the paired asset, or if the paired asset is just like a stable coin, I just want to earn yield. They're not interested in speculating on the market. They just have stable coins and they want to farm these stable coins. And then what our contract will do is basically bring those two users together and add LP. Once they're combined. Now the reason why we originally called it leverage volatility farming, is effectively it is a lending pair that we're setting up, with the supplier to the lending pair is supplying the paired asset. So let's say the stable coin, and the person that's got the P token, who's bullish on the P token, effectively borrows through the lending pair the paired asset to add as LP. But crucially, and the reason why we changed from LVF, leverage volatility farming, to boosted volatility farming, is the collateral for that debt position is the LP itself. So in the LP, because it's a Uniswap V2, or like the constant product liquidity pair, in the LP you have 50% token and 50% debt. And effectively that 50% debt, or 50% of the paired asset, is the debt. So it's a little bit hard to explain it, but effectively the collateral, half of the collateral is the debt token and is collateralizing itself. So it becomes extremely difficult to liquidate it versus your standard leverage system, where you're putting up, a collateral to borrow a separate debt token, and the volatility between those two, you could end up with a very in a bad debt position. But in our case, the debt token is being added as part of the collateral, so it's collateralizing itself in that way. Anyway, the result is that the user gets this boosted volatility farming. So the fact that they're borrowing the paired asset and adding it as collateral, they're effectively doubling their farming position. If we're just going with the standard position, let's say they have $5,000 worth of P token, they borrow $5,000 worth of USDC, they now are farming volatility with $10,000, even though they only had $5,000 they put up front. So they're boosting their volatility output. And so long as the yield that they're generating is more than half than the interest rate that they're paying on the paired asset, they're effectively creating they've got a net positive position in that case. Sorry, that was a very poor explanation, very confusing.
No, that was actually awesome. It almost sounds like a carry trade, but with Uniswap V2 OP tokens. It's really interesting to see how it's going to play out. It's cool.
Yeah. And that's just step one.
Yeah.
So there's, that's sort of what haven't even really communicated that aspect so far. So we've got like an educational series that we'll be putting out on how this all operates. It's sort of a little bit hard to describe it without showing the mechanism and like some flow charts to show, okay, well the debt comes out here and it goes straight back in as collateral. So you can see the whole process and see how it's collateralizing itself. And then also just some numbers with it also helps to see that, okay, well I've got a $10,000 farming position now, whereas I only put up $5,000 worth of collateral or upfront cost. And my debt is half of my farming position. And that's why I can pay up to 2 times the interest on the interest and still be net positive in that yield, that I'm generating. So it makes it a lot easier when we'll come out with these diagrams and stuff. And our graphics design team has been working on that and come up with some really good images. So we'll be coming out with that. But Meta, is there anything else you want to talk about on just the standard BVF, and then maybe I can give some little tidbits of some of the bits that come after?
Well, I might go super simple. Top line,
please,
what does all of everything that Intern's just said that may have gone over 99% of people's heads? If you got it, great job. You're very smart. Basically, long story short, we're adding liquidity to pods more accessible. We're making it something that doesn't require you to split your capital across an asset you're bullish on and something to pair it against. You're able to provide just your asset and farm volatility on a position that's twice the size of what you've deposited. Your debt position, which is from borrowing, is only worth half of what of your position size that you're farming, meaning that as long as your yield that you're getting from your pod is half as much as the yield that you're paying to borrow, you're breaking even. Anything above that, you're making profit. So we expect it to be highly efficient and cheap to borrow. In terms of how the lend and borrow markets work, that's all driven by supply and demand. So the market will quite literally set the rates on what lenders are getting in return. There will be some, as standard with the lending market, there'll be some open fees and compounding fees on positions, and that will accrue some yield. And this is the part that I think most people should be excited about, is there's going to be a share of that yield which goes directly back to loyal Peas holders. We'll give more detail on exactly what that model looks like in future. I don't want to spoil too much, but it does take Peas from being a deflationary rewards token to something that actually delivers yield on top of that. So when we say boosted volatility farming is going to be huge, we do mean it's going to be huge, and it's going to bring significantly more liquidity from what I've covered, but also in another aspect I'll mention in a second. But on top of that, it's adding yield to Peas. So it's going to make the Peas token even more valuable, and the network effect of it so much more powerful. So the other aspect is we've spoken about what happens from an end user perspective. Someone's bullish on an asset, they want to deposit it. There's no reason a protocol couldn't do the exact same thing with their native token that they've got sitting idle in their treasury. One thing that I can tell you as a project lead, it's very easy to accrue your own native token, and it's much harder to accrue and store larger stable coins and blue chip assets. So the ability to be able to deepen your liquidity on a full range using only your native token is something that's not currently available in the market for 99% of protocols. Usually at the moment you could add liquidity to a Uniswap pool, but if you do that single-sided, you're adding resistance. What we will be unlocking is the ability for a protocol to deposit their own native asset and add full range liquidity, including support side. So it actually adds support to their chart and makes their chart stronger. And that position will be paying for itself through the rewards that come through, and it will actually reduce the debt position through the yield. So there's huge opportunity for millions of dollars to come in for protocols wanting to source deeper liquidity for their token at a near zero cost without having to go to expensive and difficult liquidity markets, which all pretty much require you to work with mercenary capital who are quite literally there to get emissions and dump them, which kills charts. And as soon as your rewards are there, they disappear. So it's going to be a much more sustainable, cheaper, efficient model of sourcing liquidity than anything else that's currently available in the market. So this is something for me that I think is quite huge. That's me trying to keep it as simple as I can. So as Intern said, as much as we try to keep it simple, this is such a big beast. We'll release all this in little bits and pieces, but there's a lot to understand, but it's all coming together. And this is a really, really huge update for us.
Well, I think keeping it simple, I mean, obviously my explanation wasn't simple, but ultimately for the user is what's important. So like the user will come in, they'll have their token and they'll be able to basically wrap it and put it into this BVF, to boost their volatility, like boost their yield outcome, all basically in a single click. And then the idea being that we can provide, some of the best yields in DeFi. And because we're a completely permissionless protocol, that any token can be added to a pod, we're basically providing ultra high yield on basically every token. As long as it has volatility and volume, trading volume, we can generate yield on it. And it becomes a very exciting sort of proposition. And not only will, hopefully protocols make use of their own treasury when they have, a whole heap of their own token to borrow that paired asset and add that LP to deepen their LP, fully funded through the yield. We also hope that they sort of, start using pods basically as mechanisms for stake derivatives of their tokens. So basically, fund, encourage their users to join the pod and put in BVF, because then that's also, generating generating this liquidity for their protocol, which they would otherwise have to do the liquidity mining sort of incentives for. But then they could use that pod as well, like people in the pod for further sort of benefits, like, I don't know, some sort of, that's the staking that you have to do to participate in their protocol, maybe other revenue of their protocol. So they can build on top of us, in terms of like the yield that we can bring, as well as we can build on the top of any other stake derivative. So we already have pretty successful pods based on, like LSTs, like wrapped, Steth, which is like the Lido ETH. And, we're compounding this volatility yield on top of the LST yield. Well, once we have BVF as well, like we can really leverage up that yield and start providing really high yield. And it'll all be super easy for the user. Just click in, click out. And that's what they can do. So hopefully, Fyde, you guys can maybe make use of this as well with your treasury, either on the, generating the yield side. So from the P token side, or also from the supplier side. So providing that supplying the counter asset, to provide, this deepened liquidity as well.
Yeah, for sure. A ton of them. That's super bullish. You guys sounds like an awesome implementation. Yeah, I think we could be providers on both sides, and kind of work around and trying to experiment with that. I think that's where things can get interesting for both of us as well. We're kind of redirecting TVL and assets, in different ways between each other for benefits of our users. So it's quite exciting. Cool breakdown. Excited to kind of see that live and implement it.
Yeah, awesome. So we absolutely are. So it's closing in on about an hour now since we kicked this off. Is there any other last bits and pieces that you wanted to get out there while we're on this space?
Yeah, just, appreciate your guys' time, and just encourage the community here to kind of come check out Fyde. Our Discord community has been growing quite actively, and there's a lot of kind of trading insights there. We have co-founders that are very, very kind of good experts on macro topics. We have an open, community AMA, on Thursdays, and oftentimes we just talk about the markets. So it's good. It's a good time to kind of just listen in yeah, and, we're making some big announcements with Base here next week or two, really coming up soon. So it's a good time to kind of get involved and start getting some of these rewards, that we'll be giving out, with Fyde and treasury token. So come check us out, guys.
Yeah, sounds exciting. I might open up and just see if anyone's got any questions that they want to chime in and ask. I'll give you a couple minutes to put in a little request and we'll bring you up and you can ask any questions. Otherwise, we'll end out the space and can answer anything within Telegram, or Discord for Fyde if you would like to know anything else. I think, overall, I think it was I think it's been really good for us to be able to talk, and even just some ideas that have come up naturally through the conversation on the space that we've had just now has been really good. Just that discussion around how we might be able to bring, some more synergy between the treasury vault and pods and how we can work with those together. Looking at things like, some of the assets that we've got sitting within pods, and obviously then being able to share some of the exciting stuff that you guys have got on your pipeline and stuff that we've got as well. That's been really good, and we really appreciate your time to join in. It doesn't seem like anyone's put their hand up for speaking, so we might close out here.
I just want to say before we close, I mentioned before that I would talk about some more advanced features of BVF. We won't go into that today, but just so you guys know, there is actually more to it, and there's, lots of other some bullish advancements on top of that base model that we talked about, which I think just really improve it heaps more, and give it a lot more utility and just some really exciting innovations as well, stuff that hasn't been done in DeFi before. We're really excited about bringing these to market, and expect some more educational material out soon where we can really go through each one of the points.
Yeah. I think it's always good to keep a little bit up our sleeve. So we can share that as and when the time comes for it. So,
there's a lot up our sleeve. Yeah.
There's some very big sleeves right now.
Yeah.
Some are, bear markets are for building, I suppose. Not that there's been a bear market, but just some are low.
Yeah.
Yeah, it's been a little quiet. Again, thanks so much, Carlos, for joining from Fyde. Thanks everyone for tuning in, and to everyone that listens back in their own time. It's, something that we enjoy doing, and we should definitely get back into the habit of doing a little bit more often, getting some community calls going, and hopefully next time we get a few more people jumping up to ask questions or make some comments.
Yeah. Appreciate the time, guys. Enjoy the conversation.
Yeah, likewise. Thanks, everyone. Thanks for listening.
Have a good one. Bye.
Bye.